Bitcoin is the biggest speculative bubble of all time, worse than the Great Tulip Mania and the Tulip Bubble. And watch out, there's a threat of an attack that could take down the Bitcoin network. Yeah, those are the statements from a new video called The Big Bitcoin Lie. It was published on the channel Politic MIT Cop, a channel with more than followers. They're really going hard against Bitcoin here. We're going to check it out because I was asked to do a reaction to it. A lot of people have written to me saying how shocking the statements being made about Bitcoin are. I also took a quick look at the comments. A lot of people have written to me saying how shocking the statements being made about Bitcoin are. I also took a quick look at the comments. Here, there are some really terrible comments like, "That was the worst Bitcoin video I've ever seen," and a lot more. I don't want to give too much away just yet. I don't know the channel at all, so I can't say much about it here. Let's dive in and see if Bitcoin can really be taken down just like that by a 51% attack.
Today, it's about why I never really report on Bitcoin and why I'm not that interested in it. For me, this goes back so far that we need to look back to 1607 and the 1630s in the Amsterdam stock market, when the Tulip Mania happened, which strongly reminds me of the Bitcoin craze we have today. Everything is always safe, they say. Everything is always completely open and transparent. And I have to say, once you understand how the system works, maybe you should take a step back and rethink your decision.
Just a quick point here. Bitcoin has never been hacked so far. There was a little hiccup back in 2012 or 2011 or something when the Bitcoin blockchain was down for a few minutes. But since then, Bitcoin has been running and it has an uptime of 99.999. But let's see what else he has to say.
The biggest main problem with Bitcoin, in my opinion, is that the blockchain is publicly accessible. So anyone can download the blocks and take a look at them. And the first thing intelligence agencies do in this world is link all those numbers, the account numbers behind them, the wallet numbers, so to speak, to people's names. And then all the transactions are recorded in this blockchain. They always sell it with the idea that, yeah, the bank doesn't have a central ledger, but we all are part of this big ledger. And yeah, anyone can take a look. And as long as you can't identify the wallet numbers, it's kind of semi-anonymous. And then all the transactions are recorded in this blockchain. They always sell it with the idea that, yeah, the bank doesn't have a central ledger, but we all are part of this big ledger, and yeah, anyone can take a look. And as long as you can't identify the wallet numbers, it's kind of semi-anonymous. But this reverse engineering to identify the individual owners is pretty standard practice in intelligence agencies.
But what represents a much bigger problem in my eyes is, and I have to agree with him here, Bitcoin is not anonymous, it's pseudonymous. You always have to keep that in mind. Bitcoin is pseudonymous, not anonymous. Many have been caught thinking otherwise, so it doesn't make any sense to engage in any criminal activities with Bitcoin or anything like that. A lot of people have also gotten caught because they thought Bitcoin was anonymous, but as I said, it's not anonymous. It's pseudonymous. You can see it negatively or positively, but it's just a fact that Bitcoin is a public, accessible, transparent ledger. You just have to accept that. But I don't want to disagree with him just yet. Let's keep going.
But what represents a much bigger problem in my eyes is that you can talk about Bitcoin for a long time. The thing is, some would say that it has no intrinsic value. And they would say the same about gold. But gold has a natural scarcity, others say, and so does Bitcoin. But Bitcoin only exists because there's someone willing to buy it back from you. You get absolutely no physical benefit from it. With gold, there's physical utility. It represents wealth, but gold is also used in electronic devices. There are gold chip contacts. It's not completely without industrial use. And the idea that someone would come up with the notion of creating gold in a lab to increase the gold supply is pretty unlikely. We've seen that with diamonds. For industrial applications, you might be able to create diamonds, but for luxury and the art market, those things just aren't suitable. And that's how you have to understand the whole thing. Bitcoin is a nice thing as long as everyone believes in it.
So Bitcoin is a nice thing as long as everyone believes in it. In the end, yeah, you might even partially agree. Sure, Bitcoin depends on belief, but the dollar depends on belief, and gold depends on belief too. If tomorrow no one believes in the scarcity of gold, because, for example, people think, hey, with technological advancements, it's now possible to mine gold in space at almost no cost, and that's going to happen eventually. At some point, gold won't be scarce anymore. Right now, it is still scarce, and then people will sell gold too. The whole idea of intrinsic value is just complete nonsense. There's no such thing as intrinsic value. Value is always subjective. That means for me, for example, Bitcoin might have enormous value because I see the utility behind it. I know that Bitcoin is a transparent monetary system that can't be corrupted, where no central bank can just create money out of thin air, and where no central banker can just change the monetary policy. We know how Bitcoin's monetary policy is set until 2140 and beyond. We really have an asset here where we can transport our value into the future, where we don't have to listen to any central bankers who adjust interest rates in their central bank meetings, manipulate rates, do quantitative easing, engage in illegal state financing, or whatever else they do. So with Bitcoin, we have advantages that we don't have with other assets. We really have an asset here where we can transport our value into the future, where we don't have to listen to any central bankers who adjust interest rates in their central bank meetings, manipulate rates, do quantitative easing, engage in illegal state financing, or whatever else they do. So with Bitcoin, we have advantages that we don't have with other assets. We have an asset here that has no third-party risk. There's no central bank, no government, no company, no organization, no boss, no CEO that we have to trust. We have a system here that's based on math and cryptography, and that's ultimately a value that, for example, I can recognize. Many people can also recognize this value, but that is subjective. For me, it may have value. For the YouTuber here who made the whole video, it may have no value because he simply doesn't see the benefit here. But he can't just say that Bitcoin has no value, just because he doesn't see the utility in it. Because, like I said, value is always subjective. And then there's always the argument that gold is used in industry for like 5 or 6, or some say 7%. Yeah, that's nice and cool and all, but that's exactly what's great about Bitcoin. You can use it solely as money and not have it repurposed for other things. Just imagine if there's suddenly a huge demand for gold. Like if a new iPhone needs a ton of gold and every iPhone has to have gold in it. Suddenly, the price of gold goes up. Just imagine if there's suddenly a huge demand for gold, like in a new iPhone where we need a ton of gold and every iPhone has to have gold in it. Suddenly, the price of gold rises. This means that if we were to live on a gold standard, gold would be our money in the supermarket and so on, then prices in the supermarket would suddenly rise because demand in industry would rise, and accordingly it would have an impact on the supply and demand of the gold market, and that would, let's say, change the price mechanisms here. And with Bitcoin, we have the advantage that you can only use it for saving, only for spending, only for hoarding. You can't eat it, you can't live in it, you can't use it in industry, and so on. And in my opinion, that's not a disadvantage. It's actually a big advantage of Bitcoin. And a lot of people don't get that. Okay, you can debate whether that's a positive or negative thing, but I just can't agree with portraying this as a huge problem for Bitcoin.
And the biggest danger that they always leave out is the 51% attack that can be launched against Bitcoin. And before people start saying, oh, it's all just theory, a 51% attack has already been carried out against Bitcoin Gold, and a 51% attack has also been executed against Verge, that cryptocurrency. And there was, for example, in 2018, there was Crypto, 51-point app, where you could rent a service to buy hash rate and launch a 51% attack on any network.
The things he's mentioning here, they might be true, but let's just say they have a completely different hash rate. Bitcoin Gold and all those shitcoins he mentioned have a much, much lower hash rate. It's way easier to launch an attack here. Also, you gotta say that with these shitcoin tokens, you can sometimes launch a 51% attack just using some graphics cards or something like that. With Bitcoin, you can only launch a 51% attack using ASIC devices. What's crazy about Bitcoin is that we have this ASIC resistance here. That means the Bitcoin mining devices can only be used for Bitcoin mining and not later repurposed for playing Warcraft or whatever. So, the attacker has much higher costs to attack the Bitcoin network. That means the Bitcoin mining devices can only be used for Bitcoin mining and not later repurposed for playing Warcraft or whatever. That means the attacker has much higher costs to attack the Bitcoin network. First, because the hash rate is much higher, and second, because you can only use the mining devices for Bitcoin mining. You can't mine any other tokens or anything like that with it, and you can't sell the whole thing later, and then repurpose it as a graphics card or something. That means Bitcoin has a much, much higher level of protection here. And when you say that some shitcoins are attacked with a 51% attack, that's not a good comparison.
It's pretty unlikely that a 51% attack will be launched against Bitcoin, mainly because of the extremely significant and substantial amount of effort it would take. But just imagine, hypothetically speaking, just for a moment, if there was an actor who controlled 51% of the computing power of this Bitcoin network. They could potentially go in and try to manipulate things. He can try to issue false blocks at the beginning. Of course, such an attack will eventually be noticed. It won't go undetected, but maybe that's not even the point. If we take a look at the case of the former Zen Cash network, now known as HoriZen, they also fell victim to a 51% attack. Back then, their blockchain was also reorganized. The reorganization was 38 blocks long. For the real folks watching who know their stuff, And the attacker managed to lighten the network by more than $500,000 back then. Then he paid less than $US for the attack, so it was highly profitable. And with Bitcoin, it's a whole different ball game. That's true, but if someone goes and tries that 51% attack, and it gets noticed and corrected, I don't even want to suggest that someone might end up having their coin stolen. We're already a step further. But just the loss of trust that would occur because it turns out that it's not as secure as they claim. And there's so much more to this aspect of it not being that secure, is maybe also tied to the fact that in the US, especially with the presidential elections coming up, there have been dozens of statements saying that the US needs to dominate the Bitcoin hash rate to ensure its own financial sovereignty. So you can see that the US would really like to have that 51% in the Bitcoin network's hash rate to symbolize that they stand behind Bitcoin. That could work, but it could also mean that the US has the leverage in their hands, or the Chinese could come together, pool everything they have, and try to get to 51% themselves. Especially when the US under Donald Trump wants to give Bitcoin their blessing, they could launch a 51% attack to undermine trust.
So there were really some very, very wild points in there. What you really need to understand about this 51% attack is that it's often portrayed as if you just get 51% for a moment and then you can break the network. Here, they were also talking about how you can steal coins or something like that. That's definitely not true. You can't just steal coins. Create empty blocks. What you can do is generate empty blocks, which would essentially make the Bitcoin network unusable. But what you need to know is that 51% isn't really enough. You actually need more like 60, 70, or even 80% of the computing power. The really important thing to understand is that you need that computing power over a longer period of time, like for example, over 2 weeks, over a week, over 3 weeks, because other blocks are always being found. And if you have, let's say, 70 or 80% of the computing power and you keep spamming the Bitcoin blockchain, generating empty blocks and stuff like that, eventually people might lose trust in this Bitcoin blockchain and just say, okay, I'm selling my Bitcoin now because it doesn't make sense anymore. The whole blockchain is just spammed. But that's the protective mechanism of Bitcoin. It's not like with proof of stake, where if I somehow have 51% of the network with 51% of the coins, I can dominate the Bitcoin network without more computing power. You need the computing power, and when other players return, or if the computing power decreases, you lose your share and can't generate empty blocks. Bitcoin's unique aspect is participation incentives exceed those to fight it. It's the same with Bitcoin. You need the computing power, and as soon as other players come back into the game, or if the computing power decreases, you lose your share of the Bitcoin network, and then you can't generate empty blocks anymore. And the crazy thing about Bitcoin is that the incentive to participate in the system is way higher than to fight against it. If you pull off an attack like that, then the coins you have in the Bitcoin network become worthless. That means the attacker's coins also become worthless. So you're basically launching the attack just to make all your own coins worthless. We haven't seen this in Bitcoin. Now, it's almost impossible. That would have been possible in the beginning when we had relatively little cash and so on. At this point, it's almost impossible. Sure, in theory, there's a risk, but from a game theory perspective, it doesn't make any sense because you have way more interest and incentive to participate in the Bitcoin network. And that's the genius of what Satoshi created here. It's a system where you have the incentive to push it forward, to participate, rather than a system where you have the incentive to fight against it. That's what's happening right now with BlackRock, the US, and so on. I mean, they should all be against Bitcoin. They did that at the beginning too. At some point, they realized, for example, Michael Saylor or Larry Fink and so on, they were really against it at first. Trump was also against Bitcoin. At some point, they realized, hey crap, we can't just crush it, a 51% attack, that's just total nonsense. So let's join in and be part of the Bitcoin network after all.
A speculative bubble, and probably the biggest one humanity has ever seen. A few years ago, there was talk of a 51% attack, especially when the US under Donald Trump wanted to give Bitcoin this blessing to undermine trust with a 51% attack. In the end, it's all a speculative bubble, and probably the biggest one humanity has ever seen. The tulip bubble was already surpassed a few years ago. The tulip bubble in beautiful Amsterdam started in 1630 and ended in 1637. And back then, the state even had to step in. At one of the recent auctions for these insanely expensive tulip bulbs, there was a recorded sales order, you have to call it that, and for a single bulb of the witcheroo tulip variety, the following was paid, and everything I'm about to list will be added up in total. It's an and not an or. So they paid 1637 for a single tulip bulb in Amsterdam. 120 bushels of wheat, 240 bushels of rye, for fat oxen.
So it's nice that he's reading everything from Wikipedia about how it was back in the tulip bubble and what people had to pay for a tulip and all that. That's really great. But he still hasn't explained why Bitcoin is supposed to be a tulip bubble here. A bubble inflates, bursts. Bitcoin defies this. The bubble will burst. Bitcoin may drop 70% or 80%, yet rebounds, crashes, and recovers. With Bitcoin, we see a completely different characteristic. Bitcoin is always labeled as, now the bubble is going to burst, now it's going to burst. And then there's like a 70% drop or even an 80% drop, and then tada, Bitcoin comes back from the dead. Suddenly, Bitcoin is not dead anymore. Suddenly, Bitcoin is recovering again. Then there's the next bubble, then there's another crash. And then Bitcoin bounces back again. So we always have these recurring cycles where we rise up with volatility. And what's being confused here with a bubble is simply volatility. With Bitcoin, we have a volatility that's sometimes really, really high because we still have a very low market capitalization. But that's not comparable to a bubble because, like I said, Bitcoin has certain properties that other assets just don't have, like the fact that we have an absolute limit, that we essentially have a computer algorithm that can't just be overridden, and so on. There are so many things we could go through in a whole list, that we have an absolute limit, that we essentially have a computer algorithm that can't just be overridden, and so on. We could go through a whole list of things right now. And that's basically the fallacy that a lot of people make. The central bank also said something like that, the European Central Bank, that Bitcoin would fade into irrelevance. They said that when the Bitcoin price was at a few dollars. And what happened? Bitcoin just rocketed to the sky, so bad English, but Bitcoin has flown to the moon at nearly a few dollars. And sure, there are always those local exaggerations and stuff, but they tend to balance out sooner or later. And I see it quite differently. I think Bitcoin is more like the needle that pops the other asset bubbles. Because right now, all the assets, real estate, stocks, and so on, are benefiting from new, freshly printed, cheap money. They're all benefiting from new, freshly printed, cheap money. So money is basically looking for some safe haven because money is being printed endlessly. And it doesn't make any sense at all to save up for a property. A property is really meant for living in, but since our money isn't a good savings vehicle anymore, because the euro and the dollar are poor fiat currencies, people are now looking for other ways to save their money. Then they get into Pokemon cards, they invest in real estate, and honestly, even tulips might be a better store of value than fiat money, although that's obviously meant as a joke. It's not really like that. Tulips are a poor store of value because they're perishable, not durable, and so on. But we can see that the whole asset price bubbles are created by the bad fiat money system. But Bitcoin is the needle here, not the bubble, because when we have hard money again, when we have fair money again, what happens then? Asset allocations are shifting from real estate to Bitcoin, from stocks to Bitcoin, from bonds to Bitcoin. A lot of people are realizing the bond market is a joke right now. Bitcoin is absorbing asset bubbles. Bitcoin serves as a vacuum for current market bubbles. It's crazy what one Bitcoin can buy today. And really, for let's say, a bubble-free world, perhaps that's a bit of an exaggeration, but it's indeed definitely going to take a long time. However, Bitcoin can really serve as the vacuum valve for the current asset bubbles we have in many markets.
It's just as crazy as thinking about what you can actually buy with one Bitcoin today. And for me, Bitcoin will never be able to replace a currency, simply because it's designed to be deflationary. The point is not that we need a currency that necessarily only inflates. But if we have a currency that's designed to be deflationary, that means there will never be more of it, only less, because there will always be people who lose access to their coins, and that shrinks the supply. You can't work with that. You can't work with it meaningfully, regardless of the fact that the whole Bitcoin network will eventually get overloaded if we try to process billions of transactions.
So that's just factually wrong. Bitcoin isn't deflationary. It's currently disinflationary. That means the inflation rate happens every 4 years. So every 4 years, we have a lower inflation rate. In 2041, when the last Satoshi is mined, Bitcoin will be constant. And with the lost Bitcoins we see every year, we'll have a deflationary money system. But that's only true until 2140, just to clarify 2021. Also, anyone who claims that deflationary money is worse than inflationary money is just repeating all the central bank manipulation that we hear in schools. They say we need a flexible money supply, that money has to be flexible with a 2% inflation target. Even if you ask Christine Lagarde where the 2% inflation target comes from, she'll probably say, I actually have no idea, we just kind of decided on that. And yeah, everyone thought it was fine. We want to somehow take away people's purchasing power. And that's basically exactly what it is. So she didn't say that we want to take away people's purchasing power. That's what I'm saying now. That's the real tragedy. We have a monetary system that's based on theft, because a 2% inflation target, which is basically what the central bank aims for, means that your savings will be cut in half over the course of your life. And where does the justification come from that we can just suck the purchasing power away from people? Where does the justification come from that we can just say, okay, it's just accepted, it's just fine that we inflate away people's hard-earned savings? It's obviously a really nice way for politicians, central banks, and people who are very close to the money creation source to basically siphon purchasing power out of society. But the whole thing is also a very, very unfair system, and Bitcoin simply offers a counterproposal. Here, there isn't some central bank that can siphon off purchasing power through the Cantillon effect. Instead, we have clear rules that are defined from the start. You can participate voluntarily, and you're not forced to take part, unlike in the fiat money system. There is no central bank here that can somehow exploit purchasing power through the Cantillon effect, but rather we have very clear rules that are defined from the outset. You can participate voluntarily, and you're not forced to take part, unlike in the fiat money system. You are forced to participate in a Ponzi scheme where your purchasing power is constantly and systematically robbed. Okay, Ponzi system can perhaps be taken back. We can now discuss whether that is the case or not. But in any case, the difference to Bitcoin is that this is a voluntary system.
And with fiat money, like the euro, the dollar, whatever, it's unfortunately not the same. Whether states actually implement CBDCs or central bank digital currencies like a digital euro or digital dollar, or if it was all just a mirage to test the waters, in the end, they might not even roll out the CBDC, but instead go ahead and ban Bitcoin. But before they ban Bitcoin, someone might pull off a 51% attack and completely undermine trust. Or the CIA might come out and say they were Satoshi Nakamoto, the one who supposedly developed the whole thing. But before Bitcoin is banned, someone will launch the 51% attack and destroy a lot of trust. Or the CIA might come out and say they were Satoshi Nakamoto, the one who supposedly developed the whole thing. For me, there are way too many question marks to invest money in that. A big, exciting question now is whether, with investment firms in the US launching products, Americans can hold and defend their Bitcoin, or if they'll end up being victims of a 51% attack. For me, it's all just a speculative bubble, a speculative asset. That has nothing to do with investing. You might as well go to a casino or buy a lottery ticket. I'm not saying that the euro is a safe currency that must be held at all costs, but there are definitely better alternatives than Bitcoin, which doesn't work if there's no electricity. Yeah, your bank account doesn't work either if there's no power, but at least there's a backup where your balance is stored. If the network for cryptocurrency collapses, if there's no mining activity because the power is out, then that network and that currency won't exist anymore. It's a bit different with a bank going offline because we still have a central bank that issues physical notes. So it's definitely interesting to keep an eye on this. It's a bit different with a bank going offline because we still have a central bank that issues physical notes. So it's definitely going to be interesting to watch. Many have gotten rich with Bitcoin, and surely some more will get rich too. But you have to be aware of the risks. And the risk is very clear here. Thousands. We see fluctuations of 20%, sometimes even 30%. We've already seen crashes of 80%. I wouldn't invest anything in that. If you can't help yourselves, maybe 1% of your wealth, your gold holdings should outweigh your crypto holdings. And then you should have at least 3 times that in gold. So your gold holdings should definitely outweigh your crypto holdings. And it's best if you keep the gold at home, of course. And I'm not giving any buying recommendations on where you can get it. Otherwise, it'll just be said that I'm recommending products that I make money off of. All I can say is you can find the Amazon affiliate links under mine.
Okay, I'm going to pause here again because there were some really wild claims being made. So saying Bitcoin can be banned is just nonsense. It's just like if I said that somehow the English language is going to be banned. Bitcoin is basically math cryptography. How are you going to ban something like that? You'd have to ban people from memorizing 24 words because that's basically what it comes down to. Bitcoin information, 2001. The CIA is Satoshi Nakamoto. That's just another claim that a lot of people throw around. Even if the CIA is Satoshi Nakamoto, then Satoshi has disconnected from the Bitcoin network. Even if it turns out, I don't know, that Elon Musk is Satoshi Nakamoto, it wouldn't really change much. Elon Musk or the CIA still wouldn't have any influence. They still can't change the Bitcoin network. The USA is becoming a victim of an attack. So I'm just going to throw a ton of question marks behind that. And then there's the whole electricity argument that comes up a lot. Yeah, Bitcoin, what happens when the power goes out? And yeah, if the power goes out, you might not be able to make Bitcoin transactions, but as soon as the power comes back, everything starts working again, and the Bitcoin network is back up and running. So that means you temporarily don't have a Bitcoin network. We've had power outages in El Salvador too, and then you just turn your Bitcoin node back on. So that means you'd need a global power outage. The Bitcoin network keeps functioning normally, so you'd need a global power outage. And then the Bitcoin network would temporarily stop generating any new blocks at all. But as soon as the first nodes come back online somewhere, the Bitcoin network just picks up right where we left off in the Bitcoin blockchain and keeps functioning normally. And that's pretty simple, but these days, a power outage is just really, really bad. I mean, when the power's out, we're looking at horror scenarios. Nothing works anymore, no supply chain, no grocery store, no bank account, no payments. So it gets really, really tough. We're almost back in the Stone Age. I mean, when the power's out, we're looking at horror scenarios. Nothing works anymore, no supply chain, no grocery store, no bank account, no payments. So that gets really, really tough. We're almost back in the Stone Age. I found this to be a really, really interesting critique. I also find it interesting to engage with critical voices. Here's my offer. Hey, if you're up for having a chat about Bitcoin, we can totally do it live. We can set it up as an interview or whatever. We don't always have to talk about each other. We can also talk with each other. I heard you're supposed to be making some really cool content here. I'm going to watch a few more of your videos to compare whether the other videos are of a similar quality or better. From what I've actually heard, there are supposed to be some really, really good videos from you, and your channel is supposed to be very critical of the system. So, yeah, drop me a comment about what you think, whether you agree with these statements or if you're more on my side or the Bitcoin side, where you might say, hey, some of these arguments are pretty baseless. Maybe there were a few points you thought were actually good or interesting, and if you have any concerns, feel free to share those in the comments too. And if you want to buy Bitcoin now, I'll drop a link below to 21 Bitcoin, where you can easily, safely, and simply buy Bitcoin. With the code BitcoinHotels, you can even get up to 20% off the fees when buying Bitcoin. See you. Sending many greetings from El Salvador with this awesome sunset. Until then, peace out, 1000.